Hey everyone, that is Snowden. Don't worry, you can avoid FOMO because we have Peter Tuchman here to tell us the down low, everything you need to know to stay on top of the action. The DL. All right, Peter, what's the DL?
You know what? It's a fascinating day. The last couple of days have been fascinating. I think we're getting all wrapped up in this. You know what? I think it's really important to see that normally what goes on in Washington doesn't really affect the market that much. But it seems that this, if we're watching the way things are unfolding, it's looking a little fragile. It's a little questionable. You've got guys exiting the White House on a regular basis, right? Cohn came in. He claimed he was there for tax reform. He did his job. He's leaving. This tariff thing came out of nowhere. When things get thrown out by the administration that have potentially huge, significant economic influence, we're not really sure. Is it going to go through? Is it not? What's it going to really take? Apparently those numbers that he threw out were just numbers that he threw out, right? How real is this? What is really going to happen? And if the powers that be really felt this was significant and it was really going to happen and it was going to be a trade war, then we'd be down thousands of points. We're not. So when you see a market open down 350 on a lot of emotional news, whether it's Cohen leaving because people felt he was actually one of the more stabler characters in the administration, he's got experience, he's a Goldman guy, which I think is a factor. At the end of the day, we're an hour and a half into the market and we're only down 150. So those are knee-jerk reactions. If they really wanted to sell the market, they could. And they would show us that. We're not going to open down 300 and rally back 150 if the fact was that something fundamental is going to change, or we understand what's going to change.
So fundamentals, does that mean that this is a stock picker's market now?
What do you mean by that?
For instance, we can't use passive investing. We can't look at sectors. We need to really focus on what individual companies are doing and the success rate of them
I don't know, because the sectors are trading down in concert with each other. So you're seeing, it's a good question. Well,
that's why I'm here, Peter.
I know. Look, as we said in the beginning when the market finally faded a couple of weeks ago, we said, look, if you loved Apple at 177, you probably really love it at 150, right? So some people, a long-term investor, there are traders, there are investors, there are hedge funds, there are institutions. There's all kinds of different people in this market, right? Traders are getting tossed around like a seagull in a hurricane, right? You're seeing yesterday the market blew through zero probably 100 times in 100-point moves, right? So, you have to take a reasonable profit and not sit around waiting for an unacceptable loss, in my opinion, if you're a trader. If you're a long-term investor, then you need to have a shopping list and you got to see opportunities. Just because the market gets knocked down hard, it doesn't mean the fundamentals of companies have changed that much, right? So Apple down 15, points over the last couple of weeks or whatever. Those are buying opportunities. Cat Tractor, another one. Things at the end of the day, those things really haven't changed. So, is it a stock picker's market? Yeah, it's a good, probably yes.
Peter, it's always so much fun to pick your brain on the floor. We know we need to do a class soon, hopefully next week, unless something crazy happens. Guys,
something crazy will happen, as we know.